Hello and welcome to the trade. Well, AI valuations are under pressure now more than ever as investors demanding to see real revenue. And this week, all eyes are focused on Nvidia for its crucial result. To break it down and more, we are joined by Chetan from Vantage Markets. Heavy, welcome back. Good to see you. So, particularly in light of what we're seeing with that threat that AI supposedly is posing to tech and in particular software at the moment, what should we look forward to with Nvidia?
Good morning, Andrew. Yes, definitely we'll see some real number this week. Definitely the key words for this week, as you mentioned, the AI concerns and the disruption concerns continue to putting a lot of pressures even for the Nvidia. Nvidia share price has been down 10% since the November-October peak, and they barely changed for year to date. In terms of the prices wise, I'm putting up some of the expectation here. You can see that expectation is there's no question, there's no concern over they will continue to deliver a very strong number, 75% of the gross margin, a 60% of the revenue growth. So I think that this anticipation, the bar is very high. But the price action clearly tells a pretty different story. We do seeing that the Nvidia, as I mentioned, the price is down to roughly 185 to 190. And but the positive side from here is that the stock price is still holding above the 20 and 50. Of course, the 200 days moving average showing the short term, near term, medium term, and the long term. The uptrend still quite valid. It's just a bit of a hesitation, a bit of a cooling down of the momentum here. The key price level I watch is that the down below will be 174. I think that will be the key and most first support, followed by 170. As I'm putting up the arrow here, you can see this is a level that has defended multiple pullbacks in the past 6 months. In terms of the upside wise, I think the descending trend line, I'm putting up the line here. You can see that this is the one that they connected from all the peaks from November. That will be a crucial line to challenge before a convincing rebound. And that also relate to a bigger picture. You can see the triangle shape here. So the prices now is getting very close to the tip of this triangle shape. So a breaking out from here looks quite imminent. I think the only questions for this upcoming earnings is that whether on the real number, as you mentioned, could reignite the AI convictions to break the shape to the upside, or could potentially see the sell effect momentum will further cooling down the AI sectors and putting more pressures for not just Nvidia but the whole AI sector.
Well, that's what we're seeing with the biggest stock of them all. Let's turn to the local markets, heavy, with a focus on a couple here. The first one being in the materials sector, which of course we've seen underlying commodity prices doing very well. You pointing out Fortescue has actually underperformed.
Yes, indeed. As you probably can see from the table here, I'm putting up a price comparison for the FMG, for the BHP and the Rio. You can see it's definitely a clear lagger, not just for year to date, but for the past 12 months. And you can also find a reason for why from the graph that I'm putting up from the down left here, that not just the performance, but also the dividend-wise, the profitability-wise, you can see the line is clearly trading down. I think that's probably one of the key sources of disappointment coming from. And for the upcoming earnings, these prices is just, as you can see, that the price is pulling back, and the couple patterns has shown up. First one is the descending tunnels here, and also the price is now trading below 20 and 50-day moving averages. Both averages, as you see, the tip of that is now turning to the south. I think it's a very clear loss of a short-term momentum here. The critical level I watch is the $20 level, and that not just the psychological zone, but also that you can see that this price is previously has acted as a strong resistance, and after the breakout in November, it becomes support. So breaking below this level will meaning that this officially we can call an end to the recent rallies, and whether or not this upcoming could hold these prices will be my key watch. Below $20 level, the next key level will sit about 1930. That's near the 200 days moving average, and breaking below will open the floor towards $18. Also, the momentum indicator also showing quite a strong sign of weakness. RSI is now approaching the oversold area, and the MACD is at its lowest level since April. So technical wise, I think the stock is really under pressure, and the all coming out to whether this upcoming earnings at least could stabilize this uptrend or potentially putting more pressure on it.
That's Fortescue. And thirdly, let's take a look at Flight Centre. It's another stock that has been under a lot of pressure. This comes ahead of its earnings results, which I think are due out tomorrow.
Yes, Fry Center will report earnings, a bit similar to FMG. The prices are down quite significantly, especially for this month. They're down about 17% from its recent peak near 1650. The key focus for this upcoming earnings will also be its margin. As you can see from graph here, the margin for the Fry Center is coming to the lowest level for the past 5 years. So that's probably a critical points that they need to expand and convince its investors for the upcoming earnings. For the prices wise, one of the most noticeable and probably more bearish sign for me is the price is now breaking below this price gap. I'm putting up a red block here. This is a gap that has provided quite significant support in the past couple months. Now breaking below this level means that potentially the downside will be accelerated and potentially putting price even further down to this yellow block here. So this is a price that has been consolidated for over 6 months. So pulling back towards this level will means that the further consolidation phase for Fry Center will even prolonged, and that was showing a more bearish sign for the investors, for the buyers particularly. For the key price level that I was looking for 1346, that also align with the 200 days moving average. That's a near-term support. And that, as I mentioned, the consolidation level will be in between 12 to 13. That means the price will down quite a lot from its recent peak.
Hebe, great to get across what you're
Thank you,
seeing
Andrew.
on the charts. Thanks for joining us on Vantage Markets. And that is the trade.